So 1 hour hard stop.
I'd like to make a motion.
Okay, we are recording. So ready to go, Linda?
I'm ready to go.
All right, good. Thank you very much. Calling to order the regular Board of Investment meeting today being Wednesday, March 9th. It is 9 a.m. You were going to say something, Linda?
I was. Just 1 second. Alex is making sure we're live.
Oh, thank you.
Sorry.
Are we having technical problems?
Let me see. Yes. We just need a couple more minutes.
Mr. Green, since you're going to get some coffee, can you get a cup for me, please?
Absolutely. Cream and sugar? Just had my tea.
Yesterday, they had the CIO panel, the CII, and the CIO from New York State. When it was time for him to introduce himself, he pretended to be in Zoom and mute. So,
that's funny.
Yeah, it was just kind of it woke everybody up because he's talking, but we're not listening, we're not hearing anything. And like, what's going on with this guy? And then, I'm in mute. Oh, that's right.
Oh, that's funny. Get so used to it. The Zoom universe, right?
Yeah. I thought it was a good throwback. Yeah. It's really interesting. The topic for the CIOs was is there anything that we should be doing given the crisis in the Ukraine? And the answer is that you always give, Mr. Green: asset allocation, asset allocation, asset allocation.
Yep. Right.
So shut up and stick to the plan.
Is that the feedback?
Pretty much, that's what I get.
Right. Asset allocation, asset allocation.
Yep. Yeah.
Right.
As
No, I tell people the fact that John Grable named his 2 children asset and allocation just blows my mind. That's real dedication.
Don't forget about strategic.
That strategic is right. How's strategic doing on the soccer team still? Yep. Little strategic. Imagine. How's that? Come on the side of the soccer.
And the middle
allocation.
name is,
pass the ball to allocation.
Risk adjustment returns is the middle names, right?
Right. That's because take their investment seriously at LACERA.
Which should have taken Mr. Grable's children. We might get in trouble.
Well, Sophia was born the first week I became a trustee, so that was the joke. I wasn't going to name my daughter at LACERA. I was like, you can't do it. So my 10-year anniversary is her 10-year birthday. A couple weeks ago.
Oh, we have
happy anniversary.
Thank you.
We are live based on the message that we got. So we're ready to go, Linda?
Let me just check. Yes, we're live now. We're good to go.
All right, so calling the regular Board of Investment meeting today being Wednesday, March 9th. It is 9:04 by my clock here. Linda, would you make the normal announcement? And also at the end, please take a roll
Absolutely.
call.
Thank you, Chair Santos. This meeting is being conducted as a virtual meeting, so I will do a roll call of the trustees to confirm attendance. Mr. Knox?
Good morning, I'm here.
Good morning. Mr. Green?
Good morning. Here. Thanks, Linda.
Good morning. Mr. Kehoe?
I'm present.
Thank you. Ms. Greenwood?
I'm here. Good morning.
Good morning. Mr. Jones?
Present.
Thank you. Mr. Kelly?
Present.
Thank you. Ms. Sanchez?
Here.
Okay, and Chair Santos.
Present.
Okay, staff participating in the meeting include the following: CIO John Grable, CEO Santos Cramen, DCEO Louis Lugo, AEO JJ Popovich and Laura Guglielmo, Chief Counsel Stephen Rice, Interim Chief Financial Officer Ted Granger, HR Division Manager Carlina Toya, Senior Staff Counsel Christine Roseland, and then investment staff include Chris Wagner, Lache Masaragian, Jude Perez, Dale Johnson, John Kim, Tara Elijah, Calvin Chang, Shelley Tilley, and Chris Wagner, I think I already got him. And consultants include Makita Investment Team, Stepstone Group, and the Alborn team. Trustees, please use the Zoom chat option to be placed in the queue. At this time, we ask all meeting participants to mute their mics until you're ready to speak. And now we may proceed with the agenda.
Thank you, Linda. At this point, I will entertain a motion to approve the minutes of February 9th, 2022.
So moved.
So moved.
For second.
It's been moved and second. I don't see any request to speak. Okay, any revisions, changes? Seeing none. Linda?
Mr. Knox?
Aye.
Mr. Green?
Aye.
Mr. Kehoe?
Aye.
Ms. Greenwood?
Aye.
Mr. Jones?
Aye.
Mr. Kelly?
Yes.
Ms. Sanchez?
Aye.
Chair Santos?
Aye.
Okay, the motion passes unanimously.
Thank you, ma'am. I don't believe there's a report on closed session items. Mr. Rice?
No, any report out will be posted on LACERA.com after the meeting.
Great, thank you. Moving forward into public comment, I understand that we do have public comment this morning.
Yes,
So,
we do have public comments, so we'll be bringing them into the meeting. Just one second. Let me see who we're bringing in first. Okay, the first person that we're going to bring into the meeting is going to be Keenan Shady. We're going to be bringing him into the meeting. If you can just enter *6 to unmute yourself. Keenan, if you can please enter *6 to unmute yourself. Can you hear us?
Yes, I can hear you.
Okay, perfect. You may begin now.
Okay, thank you. Good morning, board members and Chair Santos. My name is Keenan Sheedy, and I'm a member of SEIU Local 721, and I retired from LA County USC Medical Center after 46 years of service for the county. And SEIU 721 has approximately 56,000 active members in LACERA. We appreciate all the work you do as fiduciaries on our behalf. We're here today to share some information with you regarding fiduciary risk. SEIU sisters and brothers across the country are sharing similar information with their affiliated funds. Systemic risk threatens long-term investment returns. There is extensive data showing that racism is one of the systemic risks that fiduciaries face. In September 2020, a report from Citibank stated, the analysis shows that of 4 key racial gaps for Blacks, wages, education, housing, and investment were closed 20 years ago, $16 trillion could have been added to the U.S. economy. And if the gaps are closed today, $5 trillion can be added to the U.S. gross domestic product over the next 5 years. LACERA has shown itself to be a pioneer in investigating systemic risk posed by racism through its adoption of TIDE and demographic data requests included in the RFPs. In addition to asking investment consultants and managers to disclose their workforce demographic data, we would like asset managers and major corporations to commit to racial equity audits like the one the Apple shareholders recently voted in favor of. We will submit relevant links and citations to the board secretary, and we would also like to share with the board the key findings from SEIU and Majority Actions Report entitled Equity in the Boardroom 2021. So on behalf of all of SEIU, I want to thank you again for all you do as fiduciaries to facilitate our retirement security, and we look forward to working with you to address systemic risks like structural racism that threaten the retirement security we are all counting on. And thank you again.
Thank you, Mr. Sheedy. Next, we will call on Joaquin Miramontes. Mr. Miramontes, if you can please enter *6 to unmute yourself, and you will have 3 minutes to address the board. Can you hear?
I'm unmuted. Do I speak now?
Yes, you can start now. Thank you.
Oh, okay, thank you. Good morning, LACERA trustees and chair. My name is Joaquin Miramontes, and I'm a member of SEIU Local 721. I retired from LA County in the Department of Children and Family Services as a supervising children's social worker. Over the past few weeks, we've witnessed the toppling of democracy and democratic values in Ukraine. Although LACERA's holdings in Russia are minimal, the economic and humanitarian catastrophe of war leaves no market or conscience untouched. As America and the world grapples with the crisis in Eastern Europe, we cannot ignore the continued threats to our democracy here at home, where a majority of our investments do reside. For this reason, I would like to suggest that the board ask asset managers and major corporations to disclose their lobbying contributions. This is critical data to understand who is funding the effort that, 1, threaten voting rights of Americans, and 2, undermine the rule of law and peaceful transfer of power, both which are essential to ensuring stable markets for safe and reliable investment. Thank you, and I think I speak for all of us when I say our thoughts go out to all the peoples of the world who are gallantly fighting to preserve democracy. Thank you.
Thank you, Mr. Miramontes. Next, we will call on Deborah Thomas. Ms. Thomas, please enter *6 to unmute yourself, and you will have 3 minutes to address the board. Can you hear us, Ms. Thomas?
Can you hear me?
Yes, we can hear you. You can start now.
Oh, thank you.
Thank you.
Hello, my name is Deborah Cotton Thomas, and I am a retired LA County social worker and co-chair of the SEIU 721 Retiree Committee. I have seen firsthand the tremendous value the county workers bring to the region and continue to contribute even after they have retired. LACERA makes that possible. So thank you for everything that you do. I echo the sentiments of the other public speakers today from SEIU, Keenan and Joaquin. I'd like to add that during my career as a social worker, I saw the value that comes from nurturing greater opportunities. Well, guess what? Equitable and inclusive practices are key to good social work, and they are also good investments. I'd like to also say that diversity, a quote from Maya Angelou, is that diversity is beauty and strength. When people value diversity, they respect and recognize difference. The action or state of being included, it should be a practice or policy that LACERA participates in to make sure that all people have equal access to opportunities and resources for people who are marginalized or excluded. Please use these as pillars or bases for standards when you are making decisions about your investments. When I look at our workforce, the communities that we serve, and the increasing interconnectedness of our world, it is clear inclusivity and diversity are not something coming in the distant future. They are here already. So when we talk about these issues, remember diversity is not a hill to climb. It is the wind in our sail. Thank you again for all your work you do, and you have all of our support. Thank you.
Thank you, Ms. Thomas. This concludes public comment.
Great, thank you very much. Thank you for the speakers, appreciate your comments. Moving the agenda forward, CEO report.
Good morning, Chair Santos and trustees. A couple of items in addition to the information contained in the CEO report. Our tenant server migration was initiated and completed over the weekend. While we hope for a smooth and trouble-free cutover, we expected and planned for addressing challenges with the data migration phase of the transition. Some of our business units and individual users have experienced delays in accessing some systems due to the slowness of the data migration. However, workarounds have been provided to staff to allow immediate access to these systems until full data transition from the old system to the new tenant environment can be completed. I want to recognize Kathy and her IT team for all their planning and hard work to effectuate this important migration. We expect to benefit from enhanced IT security and a more robust integration of our critical systems in the future. Wanted to mention workload in the call center continues to trend up with an increase of 60% in the call volume during March Madness season. Although the calls and counseling sessions are rising, we are not seeing a corresponding spike in the number of retirement applications being filed. We expect to be at or slightly above last year's retirement filings of approximately 3,450 applications. I did, at the request of the board chair, provided a supplemental report on our hiring plans for the investment office. And so the information is there for you. I know that you have a very important discussion, the CIO report. And so with that, I'm more than happy to answer any questions that you may have about the hiring plan or any other topics of interest to the board.
I don't see any requests to speak. The only thing I can say, Mr. Kryman, thank you for that supplemental report. We really appreciate it. And I would ask that every month an update on the hiring process be provided with you CEO report.
We will do that.
And also I will remind you to please make sure that we follow the procedures that this board and the Board of Retirement has established and how we move forward. And I know Mr. Kehoe and Mr. Green did a lot of work over the years in establishing those processes. Everything has to be discussed at the committee level. Any changes in policy cannot be done until the adequate committee has discussed it and made a recommendation to the board. So I appreciate if you make sure that your staff adheres to that, and we will continue to operate efficient. It's really important. Again, I don't see any additional questions or comments, so I'm moving the agenda forward. And the next item is the CIO report. Mr. Grable.
Thank you, Mr. Chair. I want to thank Tara for driving slides today. I'll give her a second to, there we go. So thank you, Tara. So I will spend most of the time this morning on the commentary section in the CIO report, talking about the Russian assault on Ukraine. But first, let's go to slide 9, please. Thank you, Tara. As you can see on the slide, we're continuing our seesaw pattern for the fiscal year. This shows the results for the month ending January 2022. The fund balance was 74 billion. Big loss for the month, down 2.1% net. And on the right side of the slide, we could see that we're in our allocation, we're in the target bands for our major functional categories. The next slide. The top chart on the left details the performance by functional category. Fiscal year to date, we can see that real assets and inflation hedges is our best performing asset category. And you can't turn on the news and not hear about inflation. And this asset category really is designed for an environment like this. So we have a asset allocation that is of multiple notes, and our real assets and inflation hedges are currently performing. The fund as a whole has had a tremendous run over the past 2 years. Through January, fiscal year to date, we're up 4.4% compared to our 4% actuarial hurdle. It is likely that we dipped below that pacing in February and further dip below that thus far in March. But once again, our asset allocation appears to be working, notwithstanding, I believe month to date, the equity markets may be globally may be down about 6% or so, not counting what's happening today. But the fund indicatively is at 72.4 billion as of yesterday, compared to 74 billion at the end of January. So our asset allocation appears to be our best line of defense. As it relates to OPEB, OPEB was down 3.3% for the month of January. The balance at 2.5 billion. And given the high allocation to public markets adds to higher realized volatility, and that will change over time as we introduce private markets, and we hope to have the RFP posted soon. So if we can turn, Tara, to slide 21. Thank you. And I want to give a big shout out to the team for crafting the slides in the commentary section. We'll go through these slides through a fiduciary lens. I think that it's obvious that the actions by Russia are abhorrent, and and kind of the human heart-wrenching aspects of it we can't discuss enough. But this will be slightly more clinical, and I apologize for that. But focusing once again on the fiduciary lens. At the top of the slide, we show more macro considerations. The top middle says more things can happen than will. None of us know the former or the latter, but we are in an environment with lots of uncertainty. On the left, there are some economic variables. We highlight here, things such as commodities. What will happen? Oil, wheat, rare earth minerals, including nickel. There are inflationary impacts. There's lack of market discovery, pricing, and this may have disruptions or further disruptions to supply chains. And it's something that we've spoken of much over the last year or so, that there have been disruptions to the supply chain. The top left also discusses economic sanctions, what will happen to global GDP, and it's likely that global GDP will be impaired by Russia's aggression, and these will impact interest rates in a variety of different ways in a variety of different geographies. On the right, there's some more geopolitical aspects. We've had a discussion, I know at our offsite, we had a discussion about globalization, and something that we all need to think about is, have we passed peak globalization? Is there a new world order that's galvanizing? Easy thing to say, hard thing to answer. The war, and this may relate to our own action that Mr. Kryman mentioned about our tenant migration, that war and conflict may have more than kinetic actions, that cyber risks are real, and that cyber risks and other actions, introduce significant asymmetries. And those asymmetric outlier type events, by definition, are going to be mispriced by markets. The bottom of the slide moves more from the external to the internal. As of the end of January, we had about 197 million at risk in Russia and the Ukraine. The footnote at the bottom shows that about 184 million or so was in Russia. That's much less today. It's potentially worthless. Over the last week or so, Russia has been excluded, deleted from most of our benchmarks for major global indices. That's going to impact valuation. The 197 will also be lower because not all that number is real time, in that many managers have disposed of positions since we had their last disclosures. The 197, however, that type of exposure is in line with board-approved benchmarks. That's our direct exposure. Our indirect exposure is much larger. Companies and countries do business with and through Russia, as well as use Russian commodities. That's much larger. It's a lot harder to identify because, once again, this is indirect and indirect. And it's really a challenge to recognize the multiplier effect and the magnitude of the interconnectivity. Speaking of interconnectivity, capital markets are global and interconnected. Investments move in various directions. And we've seen that, over the last several weeks. We always see it, but as it relates to Russia's aggression, we see it where commodities may be up. Equity markets globally have been rattled. Rates may move less than had been anticipated because the Fed may be more dovish on account of slowing GDP. With that said, and as is referenced here, we have greater portfolio insight than ever. It used to take us at least a month, maybe more than a month, to estimate our exposure to a sector or a geography. We custody more assets directly than ever. The board has made significant investments in risk systems, and that gives us greater portfolio knowledge such that we can better identify our exposures. The board can potentially take actions faster than ever. And once again, through a fiduciary lens, that is critical. Operational considerations on the lower right include things such as our custody bank, State Street. We use sub-custodians in Russia and the Ukraine. Markets there are closed. There's no pricing. There are no transactions, such that the ability to take action is somewhat limited, not just by what the benchmarks are doing and the index providers, but by the operational considerations of not having access to securities that we had access to that are held in our name, several weeks ago. The bottom of the slide highlights something that I say every month, and I'll probably say every month going forward, is our asset allocation serves as our best protection. Diversification is the best risk mitigant. However, our asset allocation identifies benchmarks that guide our exposures. And prior to hostilities, our benchmarks included Russian exposure. If we can go to the next slide, please. So there have been lots of calls for divestment. LACERA, the board received a letter from the Board of Supervisors from the county. In Sacramento, in the legislature, Senate Bill 1328 addresses Russia and Belarus. There's a call for divestment of state money. There's also significant reporting requirements for 37 Act funds. And this has broad-based support amongst the legislatures. It's estimated that almost half of the joint houses are sponsors for the Senate bill. As it relates to the 37 Act funds, it in its current instance would call for direct and indirect exposures, reporting on that, extensive reporting and disclosure. This is something that we will monitor and update the board as that legislation evolves. One thing I'll point out on this slide is divestment and kind of disclaiming and disdain, for that matter, are very different things. The latter is more immediate. The former is very complicated. You know, some considerations include that divestment decisions are often too late. They happen after an incident has happened. You know, in this case, you know, it may happen where assets may be stranded. Divestment is complex. There's a difference between existing investments and new ones. There's also a difference between custodied assets that we hold directly and commingled funds, where an asset manager may hold on our behalf. We certainly have more control over the former being custodied assets, than we have over the latter. We also lack true portfolio clarity in kind of real time as a result of our business model. We currently outsource security selection, which means that there's always, even if we have better insight than we've ever had, there's some aspect of us always playing defense because a third party is making decisions for us as it relates to not asset allocation or implementation, but more security selection. For these reasons, and I'll go slowly through this because I think it's really important, LACERA already has a thoughtful process in place to address the issue of economic substitution and potential divestment. We have a policy and procedures. First, as the slide details, our investment management agreements require our partners to adhere to the Treasury's OFAC list. The OFAC list describes companies where there may be sanctions in place. Our corporate governance policy has an established process for the Board of Investments to consider economic substitution should the board want additional restrictions above and beyond the OFAC list. This is a multi-step process. That process starts with the Corporate Governance Committee. The Corporate Governance Committee will go through its deliberative process, and that may end up with a recommendation to the Board of Investments. This isn't a new process, it's an existing process, and it helps us in situations like this. And I use the word deliberate or deliberative, and it's deliberate for a reason. It elevates our fiduciary duty, and it avoids bad choice of words, but maybe knee-jerk reactions that may not potentially maximize the value of the fund. The board has an existing policy for situations like this. As it relates to some calls for divestment, some of the decisions referenced in the county letter have already been made for us. I mentioned it already. First, the benchmark providers. Virtually all non-Russia only benchmarks have deleted Russian securities as of various points of this month, but Russia is no longer in these broader non-Russia only benchmarks. Now we're left, with that said, with certain decisions regarding stranded assets, regarding future investments to the extent that managers may have the ability to invest outside of benchmarks. But what we see on the news each day is that there are growing self-imposed moratoriums by both companies about not doing business in Russia, as well as asset managers about staying away from making investments in Russia. Next slide, please. Thank you. And here are some thoughts. I can't reiterate this enough. We have a good process to evaluate this situation and future ones. In many ways, future situations may have a larger portfolio impact than the 25 or so basis points directly related to our February exposure to Russia. I believe that we're better positioned than ever to contemplate situations like this. The board has invested a lot of time and attention and adopted an allocator to best-in-class investor mindset. That includes having a diversified portfolio, thinking about risk management, trying to address asymmetries and making sure we're adequately compensated for risks in the portfolio. We have existing policies and procedures for economic substitution. There's been significant efforts into our corporate governance policies, our principles over the last several years that puts us ahead of the curve in order to address situations like this. We're also ahead of the curve as it relates to data management tools. The Board of Investments has made significant investments that can save us months. By saving us months, the board is protecting fund assets. That's invaluable. With that said, there's always room for improvement. I think that's a healthy mindset. It shows humility and it's cognizant of our fiduciary duty. Still, there's some opacity in the portfolio as it relates to commingled funds and private markets. And, and once again, global markets have indirect exposures that are very difficult to quantify. The final thought is that divestment discussions are very difficult. The disdain isn't, but the discussion is very complicated, and maybe it forces us to think about what is on the horizon. And with that, Mr. Chair, I'm happy to stand for questions.
Thank you, Mr. Grable, for that presentation. Gina Sanchez has a question.
I just had asked how much of the 26 basis points was specific passive exposure versus exposure like in an active form.
I believe, and we can get this data, that the largest single holding probably is in the passive ACWI benchmark or portfolio, but we do have exposure in emerging manager debt, where that was a significant part that's been reduced by managers. So it was lower in January than it was in December, lower in February than it was in January. Our emerging market active equity, there were exposures there because it was part of the benchmark. But the vast majority was in, as well as in our real assets completion portfolios, but it was really in line with the benchmark.
So does that get effectively cured by the MSCI decision and the other decisions by the other indexers?
It gets cured as it relates to new investments. The issue is, as soon as those markets potentially open because they're closed, we're left with securities and that have been marked to zero effectively globally, and they're effectively abandoned. But everybody, the moment the markets open, may be trying just to sell it at any price because there is no bid.
Yes, yeah, no, I'm aware of that. I just simply meant cured, and that the decision about making new investments is effectively determined by that. And then there's a segment that we really have to consider as an organization as to whether or not we want to allow any other non-passive exposure.
That's correct.
Thanks.
Great, thank you for that. Moving forward, I don't see any further requests to speak. Moving the agenda forward, we're going to item 7, consent items. Item B was pulled. PPI is planning a study mission in Bogota, Colombia, but they're not able to do it in April. They're looking at potentially August or November. So anyway, item B has been pulled. The only item that we have in the consent item is subsection 8, which is the Col Capital, that's the Colombia Private Equity Association conference that they have in Colombia. I will entertain a motion to approve.
This is David. I'll move the item.
I will second it. It's been moved and second. Roll call, please.
Mr. Knox?
Aye.
Mr. Green?
Aye.
Mr. Kehoe?
Aye.
Ms. Greenwood?
Aye.
Mr. Jones?
Aye.
Mr. Kelly?
Yes.
Ms. Sanchez?
Aye.
And Chair Santos.
Yes.
Thank you.
Thank you for that. Moving forward to non-consent items, subsection 8, Mr. Rice.
Yes, thank you. The governor's proclamation of COVID emergency remains in effect, and therefore the board can still take action to permit teleconference meetings. However, we moved this item from the consent agenda to the non-consent agenda this month to simply give an opportunity to inform the trustees that termination of the emergency proclamation is something that's definitely on the table in Sacramento. There are concurrent resolutions pending in both the Assembly and the Senate. The Assembly resolution isn't really going anywhere, but there are hearings scheduled in the Senate this month. It's something that there are parties on both sides of the aisle in Sacramento that are interested in terminating that resolution. So we will see what happens in the legislature. On the governor's side, the governor can terminate the resolution at state of emergency, rather, at any time. Our legislative advocate in Sacramento is in active contact with the governor's office and keeping us informed of the temperature in the governor's office as well as in the legislature. And Joe Ackler, our advocate, advises that nothing from the governor's office is imminent. However, the issue is under kind of continuous consideration right now. However, the governor's office has emphasized to Mr. Ackler that the decision will be deliberate and it will be socialized before being announced so that there isn't an abrupt change. The expectations are that it will probably be at least a couple of months before the state of emergency is ended. However, it could end earlier than that. Once the state of emergency is over, it has been terminated. We will no longer be able to invoke the section of the new Brown Act, the new Brown Act provision that we've been operating under for the past a few years in terms of the format of the teleconference meetings that we've been holding, and we'll have to go back to the old way of agendizing teleconference locations or return to the boardroom. There is a bill pending in Sacramento that would eliminate the requirement of the Brown Act to announce trustee addresses, but that bill it would be a significant change in the Brown Act, because the idea of the Brown Act is not to facilitate teleconference meetings, but to facilitate open and public meetings. So the prospects for that bill are unclear, and it would not be in any effect be effective, barring an urgency section being added, until January 1 of 2023. So we need to be prepared for return to the boardroom. The executive office will be making a presentation on that subject at the March 23rd joint meeting. Happy to entertain any questions. Thank you.
Does this need a motion?
This does need a motion because we still are operating under the relaxed rules for now. So yes, we do need action as in past months.
I'll make the motion.
I'll second it. David, I'll second it.
It's been moved in second. I don't see any request to speak. Roll call, please.
Mr. Knox?
Aye.
Mr. Green?
Aye.
Mr. Kehoe?
Aye.
Ms. Greenwood?
Aye.
Mr. Jones?
Aye.
Mr. Kelly?
Yes.
Ms. Sanchez?
Yes.
Chair Santos?
Yes.
Okay, the motion passes unanimously.
Thank you. Moving forward, subsection B, recommendation by Mr. Rice regarding reviewing the policy covering the use of open and closed session to consider purchases or sale of investment properties, or especially investments. Mr. Rice.
Yes, thank you, Chair Santos. In 2015 and amended in early 2016, the board adopted a formal policy for the use of closed session. This policy was adopted back then in response to investment staff concerns and also board concerns that making purchase and sale decisions in public limited the public discussion that was possible because of confidentiality concerns, and also created the risk of market impact. So this policy was created, and staff and the boards have been operating under that policy continuously since the fall of 2015. The policy is now 6 years old, so it's appropriate to review it. There have been some trustee comments about possible revisions to the policy. Staff is not proposing any revisions to the policy. We believe it's adequate as is, but we certainly welcome comments, and of course we'll take board direction. I will note that in discussions with the Chief Investment Officer about this policy, he also is not proposing any changes right now. However, he suggests that his vision for the future, next time or at some point in the future when the IPS is reviewed again, that the investment office would at that time consider bringing this issue into the IPS in furtherance of the objective of having the IPS be an all-inclusive source for investment policies. I'm happy to entertain any questions. If the board is satisfied with the current policy and doesn't wish to make any changes, this item can simply be received and filed. If there is a desire for changes, a motion will be required, and we would make the appropriate changes directed by the board.
Thank you, Mr. Rice. I don't see any requests to speak.
Chairman Santos.
I have my hand up.
Yes, sir.
Mr. Chair, I have my hand up.
Go ahead, Joseph.
Okay, good morning. I was the trustee who at the last, good morning. I was the trustee who at the last board meeting asked the chair to put this on the agenda. And I did so. I'm fine with the policy, and I agree with it with one exception, which is that I find the justification to hold closed session items specific to the selection of investment managers. I find those justifications weak when compared to the other items, specifically because generally the selection of investment managers comes to this board as a result of a competitive request for proposals process. We get the proposals in, staff evaluates them. There's public information around for months regarding what LACERA's investment objectives are and intent is. And I found it less supportive that this idea that the decision about an investment manager, one among we're basically reviewing and adopting Mr. Grable's recommendation. That's not going to move markets. I mean, come on, the information that we're going to go into the space and commit X dollars has been out there for a long time. Are there confidentiality issues, expectations from our partners? Absolutely, and we should respect those. But there are mechanisms available in open session to respect those confidentiality issues. We don't need to bring it into closed session. I generally am very cautious about items we bring into closed session because I think we're a public agency that does our business in public. And I found the justification for bringing the selection of investment managers into closed session. I found that to be somewhat problematic, and I still do. So it wasn't clear to me, though, from Mr. Rice's memo that this was that this discussion today was kind of the formal discussion to revise the policy. I thought that would be the way I read the memo is that if the board wanted to take an action to accumulate comments from trustees, as we did recently with the travel policy, for example, there would be a process to do that. I didn't think that would be done today. So those are my comments.
I appreciate that, Mr. Kelly, and yes, I think any suggestions that come out should be the staff should route them to the appropriate committees or here for further discussions and place it on the agenda if required. Mr. Jones?
Yeah, good morning, Mr. Chair, thank you. I just had a question. I know there are a number of public watchdog agencies that make it their good citizen mission to kind of deal with issues of transparency. Do we have any data points, Council Rice, at all? I mean, is there anyone who's made a complaint in one way or the other about the closed sessions or the lack of transparency? I'm just trying to see if there's an external constituency that has some concern that at least I'm not aware of about how we use closed session at all.
Yeah, thank you for the question, Trustee Jones. This section of the Brown Act, 54956.81, was enacted into law in 2005 based on a bill that was actually sponsored by SACRS, the State Association of County Retirement Systems, of which we're a member, and Ms. Gray is a leader. It was non-controversial at the time it was adopted. It was adopted to address the same concerns that this board had in 2015 in adopting this policy to actually use the measure. The exemption from open meeting is widely used by public pension systems, state and local, throughout the state of California. In other words, it's utilized by other county systems, is also utilized by CalPERS and CalSTRS, although they're subject to what's called the Bagley-Keene Act, which is the state counterpart of the Brown Act. But the answer to your question is it's widely used, it's non-controversial. I'm not aware of any watchdog agency expressing any concern about the use of this provision by LACERA or by other agencies. There was some controversy back in the early 2000s, and that was sorted out through the legislative process. Since and there was there was a request, for example, that the closed session exemption be broader and include a wider range of investment issues. And the proposition that SACRS made and the place where the legislature came to rest and the governor approved was that the closed session can only talk about specific purchase and sale decisions where there might be market impact or where there might be confidentiality issues. So that was kind of narrowed back at the time. And again, I'm not aware of any controversy. We do get Public Records Act requests regularly about closed session actions, and we have a process to respond to those. We do produce redacted copies of closed session memos, as we're obligated to do under the Public Records Act. We also make it a point of being more disclosive in our both our agendas and also particularly in our report out about not just saying we decided to buy X fund, but that we decided to buy X fund, which is in the following asset class. It has the following strategy, and it implements that strategy in certain specific economic sectors and geographic areas. So we make a real effort here at LACERA, and I think we're really on the disclosive end of the spectrum among public systems in terms of what we report out. And so this is pursuant to the board's policy, because the board policy wanted to make sure that we weren't just doing this completely behind closed doors, but that the report out was disclosive. And so we have followed that direction. And so I believe we have a sound system. It's not controversial. Things could change, but as of now and for the past, 17 years since it went into effect, this statute, it has not been controversial.
Thank you for the thoroughness of your response. I appreciate it. Appreciate that, Council.
So in essence, if it's not broken, don't fix it. So I'm going to
comment, Mr. Chair.
Yes, sir.
Just to follow up on Trustee Jones's question and Ms. Rice's response, I do think it's important to keep in mind here that we're talking about the board's approval of a recommendation that flows from the CIO regarding selection of a specific manager. For those counties, Stephen, where the board has delegated that responsibility to the CIO, those matters are not coming before the board. So you may not have data points because the opportunity doesn't arise. Here, what struck me when I went back through the last 5 years worth of agendas is that at some point in time, and I had come off the board then, and so I wasn't aware of it, but at some point in time, two things happened. Number one was investment manager selection moved from open session to closed session. So there was a long period of time where we had discussions about selection managers in open session. Number two, the number of recommendations, the number of firms in the recommendation consistently became one, which aligns with Mr. Grable's, the board approved procurement policy. But those two things happened, and I wondered, okay, why, what justifies this? So I put forth a query to Mr. Rice, and I appreciate his memo and response. But I still feel that the actual selection of the manager, these 19 managers submitted responses to the RFP, make it, our recommendation is one, manager one, do you approve that? That doesn't need to be held in closed session. I don't feel that the justification that supports other actions being held in closed session applies to that. The information's been out there. Everyone knows we're going into the space, how much we're putting in, why we're doing it. All of that's public information that we release in the RFP. The actual selection of any one of those managers that responds, in my mind, doesn't rise to the threshold to hold that discussion in closed session.
Just briefly, excuse me. Just briefly before Chair Grable or CIO Grable speaks us to address the comments. The comment that Trustee Kelly makes about delegated authority and therefore some items do not go to the board and other systems is a fair comment. But nevertheless, if you look at the agendas of other 37 Act systems, they do invoke this statute for other types of investment decisions, and maybe managers. That some of these descriptions are not very disclosive, and so it's not clear exactly what's being discussed. But that's a legitimate observation. With respect to managers generally, it's true that many of these do involve RFPs, but there's more to it than that, because in our closed session presentations, we disclose extensive due diligence information. We disclose consultants' reports. We disclose agreement terms. And under the Public Records Act, those are not subject to public disclosure. And so following from that, those are appropriate closed session issues.
I agree with that statement, Mr. Rice. We had some problems in the past where information about a particular manager went out and created a big problem. So I remember the extensive discussions that we had when we created this policy. I disagree. I don't think it should be reviewed at this time. But Mr. Grable, you wanted to make a comment?
Thank you, Mr. Chair. The one thing I'll add to the conversation for the board's consideration is, if we were to look back in terms of, Trustee Kelly highlights, that there have been some changes. I think one of the changes is the content of the recommendation to the board, in that our diligence is more comprehensive than ever. We're showing more information than we ever have, and it is much more disclosive in more different dimensions than what was disclosed potentially in a decade or so ago. So I think that the nature of the materials that the board has for its deliberation is quite different.
Ms. Sanchez?
Sorry, I was just being snarky.
All right.
We're gonna look it
okay. Okay, we moving forward, and I'm going to deem this memo received and filed. Moving the agenda forward. Next item is non-consent items. Subsection C, recommendation to approve the travel policy, section 3, regarding the $12.82 that I went overboard.
So moved.
The item. Second.
It's been moved in second. I don't see, hold on, I got some things over here. Not that I don't see any requests to speak. Roll call, please.
Mr. Knox?
Aye.
Mr. Green?
Aye.
Mr. Kehoe?
Aye.
Ms. Greenwood? Aye. Mr. Jones?
Aye.
Mr. Kelly?
Yes.
Ms. Sanchez?
Yes.
And Chair Santos?
Yes.
Okay, the motion passes unanimously.
That concludes the non-consent items on the agenda. We're moving to reports. Subsection A, Mr. Perez, regarding the performance.
Yeah, good morning, Chair Santos and trustees. As you mentioned, the next item on the agenda is the quarterly performance book. So In your packet today, along with the performance book, you should also have a short presentation. As you know, the team updated the performance book in the second quarter of 2021, and this will be the first time certain sections will be discussed with the board. So in the coming presentation, John Kim will discuss performance. Tara Elijah, who's doing double duty as our driving slides, will also cover risk, and Dale Johnson will talk about the fund's ESG and climate profile. So with that short introduction, Chair Santos, I'm going to hand the presentation over to John Kim to begin.
Please, thank you.
Good morning, Chair Santos and trustees. So we'll kick off the presentation on the performance section on slide 4. So here we see the total funds quarterly snapshot, and this dashboard view was created with the intent to provide a health check of our portfolio to the board. So a few metrics to highlight on this slide include the 3-year annualized Sharpe ratio of 1.5. That's up 53% from the prior quarter and has been consistently on a steady incline since the start of the year when it was marked below a ratio of 1. Next, we had 62% of our managers outperform their respective benchmarks, up 20% from the prior quarter. And finally, to the far right, the 3-year annualized tracking error of 2.4, flat from the prior quarter, is a testament that staff continues to monitor and mitigate our corresponding level of risk where possible. Next slide, please. Here we show the various indices where we bench our fund against, grouped by functional category. And at a quick glance, you can see a contrast between the left and right panels. And the left side is comprised of markets considered growth, real assets, and inflation hedging, while the right side is comprised primarily of the credit markets. And as shown on the left side, the markets exhibited strong Q4 and calendar year performance led by US equity markets, core private real estate, and global infrastructure. But in contrast, the credit markets on the right side were generally muted for the quarter as income generation was offset by negative price returns. Next slide. So with that overview, we'll move forward with the review of our asset allocation. We finished the year with a total market value of $75.6 billion. And as a refresher, shown here is our new functional asset allocation structure. And I'll briefly mention some key changes that went into effect on October 1st, 2021. And the first is the creation of a new 5th functional category at the bottom of the slide called overlays and hedges. And this new category includes our total fund cash overlay program, as well as our currency hedge mandate. And next within credit, our high yield, bank loans, and emerging market debt strategies were consolidated to reduce granularity and allow for implementation flexibility. Third, within risk reduction and mitigation, we have a new discrete allocation to long-term government bonds. And lastly, value-added real estate was moved to the growth functional category under non-core private real estate. And a final comment on this slide is related to our new policy weights, which is in the middle column. It represents the initial half step into our implementation plan. And these updates have resulted in a reduction of both our over and underweights across the portfolio. Next slide. So slide 7 is our total fund summary page, and it's from the quarterly performance book. For the quarter, the total fund returned 4.4%, beating its policy benchmark by 110 basis points on a net of fees basis. For the calendar year, the total fund fared even better, outperforming by 470 basis points, as both growth and credit generated excess returns north of 700 basis points. And from a peer ranking perspective, that 1-year outperformance resulted in a 27th percentile finish for the total fund, compared to the 89th percentile for a traditional 60-40 stock and bond portfolio. Next slide. So drilling deeper, slide 8 presents our quarter-to-date results of an absolute return attribution analysis. And this helps us to identify which functional category had the greatest impact on the total fund's return. And as shown in the waterfall chart, all 5 functional categories were positive contributors for the quarter, but it was the growth category that remained the main contributor, accounting for roughly 73% of the total fund's net return. And not surprisingly, 3 out of the top 5 contributors were from growth, with the largest account in the total fund, the State Street Global Advisors MSCI ACWI IMI mandate, leading the way. Next slide. Slide 9 presents our quarter-to-date results of a relative return attribution analysis, and this helps illustrate whether our investment decisions added value relative to its benchmark. Similar results to the prior slide, growth exhibited the largest total value add to the fund, with the selection effect being the primary driver. It's also worth noting that across all 5 functional categories, the allocation effect was marginal, as the new strategic asset allocation structure helped tighten our over and underweights as previously mentioned. Next slide. And on slide 10, we present our risk versus return scatter plot. The risk section will be discussed next, so I'll keep my comments brief here, but 2 results I would like to point out are the positive information ratios in our credit and risk reduction and mitigation categories. And as a reminder, the information ratio is often not only used as a measure of a manager's level of skill and ability to generate excess returns, but it also attempts to identify the consistency of that performance by incorporating a tracking error into the calculation. And the higher the information ratio is, the better the manager is in consistently producing excess returns on a risk-adjusted basis. Next slide. And finally, on slide 11, we list our total fund reporting structure. This includes all of our sub-asset class composites that roll up to each functional category. There's a lot of information on this slide, but I would like to take a moment, though, to recognize 2 sub-strategies at the top of our leaderboard for the calendar year, and that's illiquid credit and private equity, with excess returns of 23% and 19% respectively. And with that, I'll hand it over to Tara to cover total fund risk for the 4th quarter.
Thank you, John. Good morning, Chair Santos and trustees. This slide shows a summary of total fund forecast risk information for the quarter ended 12/31/21. At the top, you can see that the forecast total risk is at 11.93. Increased market volatility and inflation drove that number up slightly relative to last quarter. We won't quite see the Ukraine-Russia impacts just yet, since this is December. The active risk is at 0.84, which was driven down from 1.13 in the previous quarter due to the implementation of the latest strategic asset allocation at the start of the quarter, which brought us more in line with allocation targets and our benchmarks. And John went over some of the key highlights of that as a reminder to everyone. The top right breaks down the 11.93 total risk by asset class, and the bottom of the slide decomposes that risk by factor types, which we'll explore more on the next slide. So in this chart, we decompose risk by factor groups as well as by asset class. And the sum of all the bars you see here add up to the 11.93 mentioned before. For example, looking at the colored bar for the real assets and inflation hedges portfolio, it has some exposures to equities as shown in the turquoise, a bit of fixed income, and commodities shown in the darker blue color. That's where our natural resources and commodities portfolio sits, as well as a significant exposure to private real estate, which a large part of our private real estate portfolio sits in that asset class. The next slide shows LACERA's active risk of 0.84 and breaks it apart into allocation and selection, as you can see in the bold numbers in the table. This quarter, when the new strategic asset allocation officially began, the active weights per asset class against their benchmarks decreased significantly. For example, growth had an overweight previously of 4%, and that is now under 1% this quarter. So being more in line with targets reduced our allocation risk contribution within the current quarter. This slide shows total fund broken out by geographical region and breaks apart both total risk and active risk by region. Monthly, the CIO report shows a breakdown by country, which is even more granular. So both the chair and trustees are very familiar with our geographical exposures. Lastly, for the risk portion, we show stress tests that have been run on the total fund. The top 10 worst case historical scenarios for LACERA are shown. For example, the #1 worst historical scenario, were it to repeat, would be an event like the GFC or global financial crisis back in 2007. Portfolio and benchmark estimated losses are shown in the bottom table and are also charted in the graph at the top. In 8 out of 10 or majority of the scenarios shown, we would have less loss than the benchmark, than the policy benchmark, and basically would fare better than the benchmark. That concludes my comments for the risk portion. And at this time, I'll turn it over to Dale Johnson, and he's going to go over our ESG and climate portion. Thank you.
Thank you, Tara. Good morning, Chair and trustees. So this slide provides a snapshot of our approach to assessing ESG factors and climate exposures and the high-level metrics utilized in evaluating LACERA's ESG and climate profile. As trustees are aware, we've started using third-party ESG and climate data analytics to monitor public markets managers and LACERA's portfolio on certain ESG profiles where the data is available. The charts in the middle of the slide are an example of how we are using the data where available to gain insight into the ESG and climate profiles of portfolios relative to their benchmark and amongst similar mandates. This analysis provides 2 primary insights. First, we can identify concentrated exposures, areas of potential risk, and opportunities in the portfolio at various levels, such as at the functional asset class or individual portfolios for assessing the fund's overall ESG and climate profile. For example, in the first table, you can see here that the overall global equities portfolio is less carbon intensive than its benchmark, within a carbon intensity of 144.7 compared to 199.9 metric tons of carbon emissions per dollar of sales for the benchmark. In the second table, you can see that a couple of mandates in our risk reduction and mitigation functional asset category have fairly different profiles relative to each other for a similar strategy. But interestingly, they have a higher carbon intensity than the global public equity portfolio. Second, the data and analytics provide a quantitative profile of our external managers' approach to integrating ESG and climate factors in their investment process, which supplements our qualitative assessments of how managers are identifying and integrating ESG factors, as presented in the ESG score on the manager scorecard. For example, Manager 2 in the second table happens to be a rated 4 on its manager scorecard, reflecting an advanced level of integration of ESG and climate factors in its investment approach. So currently, we can evaluate the climate profile of our public market investments and real estate portfolio and engage managers on how they are taking into consideration certain ESG factors as part of their portfolio construction process. We are pursuing several approaches to expand our coverage of climate data for the private market assets and to provide a more comprehensive total fund view of climate-related risks and opportunities. So that concludes our presentation, and we'd be happy to take any questions. Thank you.
Thank you for that presentation. I don't see any requests to speak, so we're going to move the agenda forward. And the next item is the OPEB performance report.
The OPEB report, Chair Santos, is for information only.
Any questions with regards to that for the staff? Seeing none, I believe all the items here are for information only. Any questions with regard to those items? Seeing none, we should, if there's no objection, let's take a 10-minute break, and then we move into executive session. But before we do that,
can we do good of the order before?
Yeah,
break?
Exactly. That's what I was going to do. Yeah. So first items. There's no items for staff review.
I have one item. The board requested that the hiring status of the open positions and hiring efforts to be provided in a CEO report moving forward.
Great, thank you for that. Moving to go to the order, roll call.
Sure. Mr. Knox?
Good morning, everyone. Appreciated the presentations this morning. I thought they were excellent. Also wanted to compliment Mr. Grable on your thoughtful comments on Russia and Ukraine. I thought that was very insightful. talking about the complexities and our fiduciary responsibilities. It's interesting you mentioned nickel. On the consumer side, there's so much press about the price of gas, and we need to shift away and into electric vehicles. But a third of the world's supply of nickel comes from Russia, which EVs need in great quantities. So it's not as simple as pulling out of one thing, dumping in another. So very much appreciated your comments, Mr. Grable. Thank you.
Thank you. Mr. Green?
I want to echo some of Mr. Knox's comments and just send up my appreciation to John and Santos and our staff at LACERA for paying close attention to the moves we're making and supporting the Ukrainian people, not just through our words, but also through our actions and our investments and keeping a close eye on it. I know, like a lot of my colleagues, we've gotten a lot of calls and texts and emails and social media posts on what is LACERA doing. And I just think it's so important we don't take our eye off the ball. This is really important. This is our money that's being invested, and we have to be extremely diligent and careful, as you all know. On a much lighter note, the whole reason that these meetings happen is because the dynamic duo, the unsung heroes every month. I want to give a huge happy birthday, Feliz cumpleaños to Bonnie, whose birthday is today. So let's give her a virtual round of applause. And the other member of the dynamic duo, Linda, has a birthday this weekend. And so I don't know what we do without you two. It's just amazing. You keep us on track and running, and you put up with some demanding personalities who shall remain nameless. And we just really appreciate you both. So happy birthday to you both. Feliz cumpleaños. Thank you.
Thank you. And next, Mr. Kehoe.
Thank you very much. I echo Mr. Knox's comments. I was going to say the same thing. I really, truly appreciate Mr. Grable's presentation and the caution regarding how we proceed with looking at this issue and this conflict. It is definitely extremely complicated and goes much deeper than the surface level. So I appreciate the discussion and the focus on our fiduciary responsibilities. And that's all I have. And happy birthday.
Thank you. Ms. Greenwood?
Thank you. I'd like to start with happy birthday, you two. I would not function nearly as efficiently without the two of you. And I also want to echo Mr. Knox's comments about the John Ukraine and what's going on. And I hope everybody has a wonderful week. Thank you.
Ms. Greenwood, yeah.
Did you lose me?
Ms. Greenwood has a wonderful week. Go ahead. Thank you. Mr. Jones?
Yeah, I'll just in the esprit de corps of the rest of the board compliment John. I had reached out to him late last week or shortly after the initial invasion, and he was very responsive and thoughtful in the communique. I think I sent him a couple of pension and investment articles, which I'm sure he had been exposed to, but just I just wanted to, express some interest in what we might be able to do, and I appreciate his patience and thoroughness in communicating then. And then the presentation today was great, and I appreciated the view from the fiduciary lens. And then lastly, just a happy 25th birthday and whatever anniversary it is of that 25th birthday for both of you, Linda, Bonnie. You guys celebrate.
Yes, we even have our birthdays together. We do everything together. Thank you. Next, Mr. Kelly.
Well, Mr. Bieber sang a song for each of you last night at his concert. So
thank you.
Careful to say out loud, Bonnie and Linda. I echo those comments before me, and I wish that both of you a really wonderful new birth year.
Thank you. Ms. Sanchez.
Well, I'm going to echo a lot here, but happy birthday to both of you. And I agree that you do so much work for us that often rarely goes unnoticed, but often goes unsung. So this is the opportunity to sing it. And I do want to thank Mr. Grable. That was an excellent presentation, and I think really highlights the complexities. And from my perspective, the greater challenge we have is not what happens to the 20 basis points of our portfolio, but what happens to 25% of emerging markets should this kind of behavior start to rear its ugly head in Asia. So, I think that these are just stark reminders that those the risks really need to be reflected in the way that we take our positioning. We need to be very careful about how we take passive exposure, because you are always a price taker in passive exposure, and you're leaving the decision to index providers to determine what goes into the index and when you sell it. And so just a reminder as to kind of what the deal is when we make that decision. And I will also like to thank the presentation, the final performance presentation. That was an excellent presentation, incredibly clear, very easy to follow. And I think adding, the components of the presentation for risk allocation, for information ratio, and the new climate components are fantastic. So hats off to all of you for putting that together. And I want to harken back to a comment that was made during public comments, which was this notion that SEIU was successful in getting Apple to agree to a racial justice audit. Herman and I are both at CII right now, and we had an amazing presentation regarding civil rights audits, which is sort of a broader lens of those racial audits. And I do think it's something that's very interesting and could add a very meaningful component to how we evaluate companies. And so I think, we need to think about how we want to provide our support to getting, to making civil rights audits a meaningful component of how we look at our exposures, how we vote our proxies, and how we impact the world with the investments that we make. So with that, just thank you to everyone.
Thank you, Ms. Sanchez. Mr. Grable.
Thank you, Linda. Happy birthday, Bonnie. I want to congratulate, I don't believe he's on the call, but if he is, Scott Drazel. Scott was not only reelected to the CII board, but he was reelected CII board chair. Congratulations, Scott. Thank you for doing us proud.
Thank you. Mr. Kryman?
Nothing from me except to just recognize John and his investment team for a job well done, not only helping us understand the impacts to our portfolio that the Russian-Ukraine conflict has, but just making sure that we're remaining strong and steady in this headwind. Greatly appreciate all of you in the investment office for all that you do for our members.
Thank you. Mr. Rice?
Yes, good morning again. I wanted to introduce, in addition to our legal divisions team that supports the investment division and this board, Earl Buhner. Earl, if you could turn your camera on. Earl is a returning retiree, actually. Some of you who've been around for a long time will remember Earl. He was the senior staff counsel that led the investment section of the legal office for 14 years before he retired. We have some vacancies in the investment section of the legal office right now. We have open recruitments for both staff counsel and senior staff counsel, but to find the quality of individuals that we want as permanent hires, it's going to take us some time. And so we brought Earl back to help with the transition in performing the work, and also hopefully training new lawyers when they join. So I wanted to introduce or reintroduce, for those of you who already know him, Earl, and welcome him back to the legal team.
Thank you, Steve. And Chair Santos.
Great. Thank you very much. That's great news that Earl's coming back, and I'm assuming it's going to be in a 120-day contract. But that's great. This is the stuff that we need to do in this environment. I wanted echo the recognition to the staff and particularly Mr. Grable, but I think I need to go beyond that. This is a perfect example of why it's so important that we have the policies that we have. I'm going to give credit to Mr. Quijo and Mr. Green, because they have been in leadership for many years, both on the Board of Retirement and the Board of Investments, and they were responsible. Close, I was there as well, but they were responsible for the processes that we have, many of these policies. There was a lot of debate that went to these policies. So this is not a policies that were created overnight. There was extensive discussions that we had, and I think that we are now seeing the benefit of the work that was done. So yes, thank you to the staff, but I think we need to recognize our own colleagues for the work that they have done to get us to where we are at. And that's important, and we need to make sure that we continue to follow those processes that have served us really well. Also like to wish the ladies happy birthday. You guys do tremendous work. I agree with Mr. Quijo. Some of us have very strong personalities, and they do manage to do that, navigate through that quite well. Just a brief comment on Ms. Sanchez's emerging markets comment. I'm a little disappointed that you didn't mention that Latin America, a lot of the experts are saying that Latin America is going to be the beneficiary of what's going on here, because a lot of those commodities come from South America, nickel and copper and others, including oil and gas. Yeah, it is always a bright side somewhere in this world. Do want to echo Ms. Sanchez's comments regarding the performance report. That is excellent. Thank you again for the work that the staff have done to make it clear and concise. Really appreciate that. Also, yeah, with the comments with the civil rights audits, I think that's very interesting. I was there in the panel, or not in the panel, but in the audience. It heard that discussions. I support you, Ms. Sanchez, in your comments, and I think that's important. I really appreciate the fact that the members, retired members, recognize that we have done extensive work with regards to the Tide Initiative. That is wonderful. Not often that we hear public comment that is positive. We usually are being told what we're doing wrong, or that we racist or what have you. So I really appreciate those comments from our members, and I wish everybody a beautiful day. There is something in the chat here. Okay, so all right, so let's do 10 minutes break. Linda, what time should we come back?
We'll be back at 10:38.
10:38 will be. Thank you very much.
Thank you.